You're a home buyer looking for financing, this video is for you. Today we'll be discussing how to choose a lender, the pre-approval process, and basic questions or common questions that buyers have when starting the very first step of the process. Today we have JJ Mazzo from the Mazzo Group at CrossCountry Mortgage, a top leading expert in the industry to help break everything down. JJ, thank you so much for joining us today.
You're welcome, buddy. Thanks for having me. Super excited to see what we can do to help answer some questions for people.
Awesome. So I know there's so many moving parts in this whole process, and a lot of buyers get caught up in like, oh, what should I save 20% down? What should I do? Should I just start going to open houses? What is really the first step a buyer should take?
You know, I think the first step everyone takes is looking at houses, right? Because when you're buying a car, you don't go in and say, let me talk to the finance guy, and then we'll look at cars, right?
Right.
So I know that they always start there, but the reality is if they know that or want to know whether or not buying a home is good for them, they need to find out what their needs are from a house standpoint and whether or not those financial needs can be met by a lender. And so really just sitting down, talking, and being consulted by a professional that has experience and understands and can figure that algebra problem for them, which is what is the most out of pocket that you have budgeted to be able to buy a home, assuming we're going to write a check for the down payment, closing costs, everything involved today, and what is the most that you have budgeted on a monthly basis that you can afford your family to buy this home as well. When we know those two numbers, it's a lot easier for a real mortgage professional to work it backwards and give you the solve for X number of this is the amount of home that you can buy.
So there's so many different options for buyers to choose. They got their mortgage broker, a bank, a credit union. Can you break down maybe just a gist of each one and which one would be a better choice for them?
Yeah, so you have a banking institution. That's where everyone puts their money and writes their checks to pay their bills. The banking institution, historically, they do all types of things. They do car loans, they do credit cards, they do mortgages, they do checking accounts, they do savings accounts. So they're kind of all over the place. So they don't necessarily specialize in mortgage. Then you have your credit unions, very similar. It's just they're a smaller institution that is there and paid for and backed by the members themselves. And then you have brokers, and brokers are middlemen between the money and the consumer. And they can go out and shop with different lenders to find out who it is that is best for their particular situation. And then you have mortgage banks. And mortgage banks are just banks that do mortgages. They typically finance. A lot of them service all of their own paper as well, or sell it on the secondary market. A lot of times people will notice that they'll make a mortgage payment and then the next month it'll be with somebody else. So that changes really between all of the institutions, just less towards the credit unions and the banks. But really they have access in-house to be able to underwrite, fund the most amount of products is what I've found. And I've worked in broker situations and I've worked in mortgage banking situations, and I've had the ability to work at banks and credit unions as well. And I've chosen to be able to work at a mortgage bank because it gives me the most amount of options at my fingertips without having to broker, middleman out, ask other areas for loan products to be able to meet my clients' needs. The best one for the person, in my opinion, is the one who is the most experienced, provides the best experience, the most product options possible, and takes a true consultation approach, and typically is getting a referral from their realtor partner, because the realtor partner is going to have probably the most experience in working with that lender in multiple transactions.
I think you kind of already touched base on this already, but what should a buyer look out for? What are things they should look for when choosing a lender?
I think the most important thing that they need to look for are online reviews, experience and time in the industry, products accessible to them, and whether or not that they're sitting down and truly listening to their clients' needs and giving them multiple options. Maybe options that the clients are looking for, and maybe options that the clients haven't been looking for. And it may not be an immediate solve. Sometimes that may be a 6-month out solve. But having no solution at all or missing on solutions are going to be red flags that they should pay attention for as well.
Should a first-time home buyer shop around for the best deal?
I think at the end of the day, I've never run into a client that says, give me the worst deal that you possibly have. The way our industry works is that those that have access to multiple lending platforms, like a mortgage bank or a broker or a bank, they're going to give you the very best options that they have. Some of us are going to have more access to options that may or may not be able to provide the results that they're hoping for. But at the end of the day, the best deal is the one that's going to get you the keys to the home. You know, we're limited. We're not, in our industry, we're not going to be upselling you to make more money. In our industry, the way we're regulated is to make sure that you're getting the best price that we have available at our institution to be able to give you those options on the product that you're looking for. I would tell people, yes, you want to look for your very best options, but you also want to be very wary on, is it the very best option and can they deliver? Because ultimately your deposit's going to be at risk. It's the largest asset of your life. And I would also look at service levels, because you're going to go through a very stressful and emotional process, and making sure that you have someone that holds your hand throughout that entire process to make sure you're getting all the options. So a lot of times too is someone may give you what looks to be a great deal, and then as you dig deeper you find that that isn't always the best deal. So making sure that you're truly analyzing the disclosures properly, they're explained to you properly. I think you'll find that many times we're all very similar across the board. They're not going to vary, but our execution, our expertise, and our service levels vary significantly.
So should a buyer choose between a fixed rate or an adjustable rate? What's the difference between the two briefly, and what should a buyer consider?
Yeah, I think it really depends on each individual buyer's situation. Someone who is an adjustable rate, for me, for instance, I have an adjustable rate mortgage. It's a 10-year fix, so it's fixed for 10 years and adjusts thereafter. I only plan on being in my home for another 2 or 3 years, and I'm very clear on that. So for me, it's a very low risk situation to have that. For someone that plans on being in their home for maybe 30 years, they may want to look at a 30-year fixed mortgage. They plan on being there forever. The reality is people only hold on to their mortgage typically 3 to 5 years anyways. So the 30-year fixed product is more than likely not something that they're going to hold on to. But when it creates a certain amount of security for them, I think that's the most important thing, is getting the security and feeling good about the product that they have chosen, and making sure they're not putting themselves in a situation that could cause them financial discord in the future. Meaning, if you plan on being in the house for sure 10 years because you have small children, and you're in a 5-year fixed, which means you're going to adjust in 5 years, you don't know where the rates will be at the time of adjustment, and you may or may not be able to afford those adjustments. If you are going to assume that risk, then you need to know what are those worst case adjustments, and are you okay to accept the worst case adjustments, and have they been disclosed to you? They will be disclosed to you, but I think a lot of times people don't read the fine print, so to speak. So I would suggest that really goes back to just being consulted properly, taking the time to look at those things.
What is a pre-approval, and why is it important for a home buyer?
A pre-approval is where you fill out an application and provide the supporting documentation behind it in order to support it and get an underwriter to review it and pre-approve your loan application, just pending a property itself. A lot of times people will just fill out the online inquiry, but they don't provide the supporting documentation and get what's called a pre-qualification. The reason that's important is the numbers that you're given may or may not meet the numbers that's on the documentation. And if you find a home and you decide that you want to purchase that home, that's where we can find ourselves in trouble, or the clients can find themselves in trouble. Taking the time to provide the supporting documentation up front is so important to ensure that you are able to purchase the home that you have your heart set on and qualify for without those hangups coming up.
So what are the documents necessary to get a pre-approval?
The things we're going to look at are your credit, your income, and your assets, and then ultimately the collateral or house itself. So making sure that we can look at your credit profile, which I know a lot of times people are so concerned about having their credit pulled and affecting their score. But when we pull your credit, we can see if there are any issues that we need to address and make sure that your score is maximized prior to finding a home. So there's a lot of value in that. Plus, there are ways for us to be able to look at your credit without doing what's called a soft pull, without actually doing a hard pull and affecting that score, getting some valuable information as well. And then, of course, typically 2 years worth of income, so 2 years worth of tax returns, 2 years worth of W-2s, the most recent month's worth of pay stubs. And then when it comes to assets, I'm going to ask for 2 months worth of statements, whether that's bank statements, retirement statements, stock statements, etc., 401ks, depending on where the assets are going to be coming from for each of the potential buyers themselves.
How does your credit score affect the home buying process?
The credit score is going to provide a scale for the lender to determine what is the amount of down payment you can qualify for, as well as the interest rate that they qualify for. There are so many different buckets of interest rates, and not everyone, it's not a one size fits all. It literally has to do with your credit score and the income and the assets and how they all intersect to determine those options. Also, the interest rates can change on the daily as much as 3, 4, 5, 10 times a day, depending on what the market's doing. So the rate that we're going to be talking about at time of pre-approval may or may not be different or change from that time until the time you actually find a property as well.
How long does a pre-approval last, and what happens if the buyer doesn't find a home within that time frame?
Usually we say a pre-approval lasts about 90 days, typically because we have about 90 days worth of documentation, but a pre-approval is good for as long as the documentation hasn't expired. So a credit report for us is typically good for 90 days. That's why they say the 90-day period of time. But I'm going to say the pre-approval is going to be as good for the income that I have, the assets that I've verified, as well as the credit report that we have as well. A lot of times one of those expires, something on that changes, and that's where we just quickly want to ask for an updated pay stub or an updated statement or even an updated credit report if necessary. And that will be able to tell us to quickly update it, and takes us just a matter of minutes to be able to do that.
Can a buyer switch lenders after being pre-approved?
A buyer can switch lenders after being pre-approved. It will create a certain amount of stress on them because in doing so, you're going to go through the typical whole process over again. And there are some things that original lender may be very intimate with that the next lender may not be intimate with. So you're going to be having to come up with solutions while it is that you already found a house. And I've always found that that's created stressful situations for people. And I've been on both sides of that coin.
What's your top advice for someone that's looking to get pre-approved?
My top advice for someone that's looking to get pre-approved is sit down with a mortgage professional. They'll be able to go over all of your concerns, really take the time to look at your unique situation so that if you're renting, we can get you out of that situation. I know a lot of times people will say, well, rates are too high. Renting is 100% rate. And when you're renting, no one's going to be giving any tax benefit. No one's going to be giving you any of the equity. And that money that you give them only goes towards their retirement project. So the sooner that we can get somebody in a home, the better that it is going to be financially for them. So just take the time to sit down. And it may only be a 30-minute meeting, a 45-minute meeting, but if you spent 30 to 45 minutes to find out that you truly do qualify so that ultimately you can change the financial future and legacy of your entire family, it's well worth it.
JJ, thank you so much for joining us today.
Cool, buddy.
We're
Those
good.
are great questions, my man.
Thanks, man.
Yeah, they were really good.
If you found this video helpful, be on the lookout for the next video in our Homebuyer series. Please make sure to subscribe, hit the like button, and comment below if you have any questions.